Well, hello there, everybody. Welcome back to Legal Talk. Man, oh man, you've stuck with us this long. I really appreciate it. Happy to have the audience out there. My name is John Mitchell. I'm the host of the show, and this is our last segment. So buckle up for it. I got some great information for you. Now, as you know, I am here in the beautiful city of Houston, Texas. I'm a tax attorney. I didn't go to just tax law school. I went to regular law school so I can answer other topics. But my forte, my main gig is taxes, right? And so I do have a tax topic to talk about today. And our tax topic is this, right? There is a thing called a Form 1099-K, letter K, K like kilo, right? So you got a 1099-K. What are you going to say to me, John? Don't bore me with all this tax stuff. What's a 1099-K anyway? I'm going to tell you this. There is a whole regime in our tax system where people report things, right? So they report things to you, they report things to the IRS. One of the things that gets reported that everybody's really familiar with is a W-2 form. So you know that at the end of the year you get a W-2 from your employer, and that W-2 form is a summary of all the money that you made during the year, plus a summary of all the money that they took out for federal taxes, state taxes, for whatever kind of tax they took out, Social Security, Medicare, whatever they took out of your check. So that is the summary. It should match up to your final pay stub usually, right? And so that is what is known as a reporting document. But that's not the only reporting document, because if you guys think about it, you also get a 1098 at the end of the year, right? That is your mortgage interest, and it usually shows property taxes and stuff that you've paid, right? So you get that, and another one is a 1099. Now, people might not know the 1099 by its name, but if I tell you that at the end of the year you get a form that shows you how much interest you got from the savings account at your bank, so you're going to recognize that. You're going to say, oh yeah, I get this funny little form. It shows how much money, I have $1 million in the bank and they paid me a $12 worth of interest, and I remember getting that little form, right? So you get the form, you give it to the tax guy, and the tax guy types it in the computer, and you pay your tax at the end of the year, right? So that is a 1099 INT. For INT stands for interest. So you got lots of different kinds of 1099s. There's a MISC, there's an INT, there's a DIV for dividends, all kind of 1099 forms. Now, what is a 1099-K? What pray tell might the K stand for? Well, 1099-K is a form that you get if you are let's say a business owner that takes credit cards, right? At my law firm, I get a 1099-K at the end of the year for all of the folks that paid me with credit cards, right? And the 1099-K has on it the total that I received in credit card payments throughout the year, and it's going to show how many transactions I got, and then it's going to have a breakdown month by month. So how much money did I get from credit cards in January, February, March, April, all throughout the end of the year, right? So that's gonna be on my 1099-K. And so what happened was, up until now, payment processing companies have not been obligated to give you a 1099-K unless you did $20,000 worth of transactions in the year and 200 transactions. So you have to jump over both of those hurdles for the company to send you a 1099-K, right? That is up until recently. Now, recently legislation was passed. That flurry of legislation that Congress got done when the pandemic hit. Well, one of those laws included a new provision that now the IRS is going to be requiring payment processing companies to go ahead and issue you a 1099-K if you got over $600 in transactions during the year, and there's no minimum limit of transactions. Or I guess if I'm really being technical, I'd say the minimum limit is one, right? So if you got at least one credit card transaction during the year, and it was over $600, boom, you're going to get a form like this. Now, why might that cause problems? Because a lot of people get money, like you go out to eat with your extended family, all the aunts and uncles and cousins, and it's, the bill was a few $100s, and you're going to pitch in, let's say it's a really bit like a wedding or something. Dinner was $1,000, right? And 10 people went, and I put it all on my Amex, because I want to get those big Amex rewards points, and everybody's going to send me $100 each, right? So we're splitting it evenly. Let's just say, right? So I'm going to get 100, 100, 100, 100, 100, and let's say I sent them a PayPal link, right? Well, guess what? Now, all of those people have used their credit or debit cards to send me $100, $100, $100, $100. Well, guess what? Now it looks like that I've got a business and I have made $1,000. But that's not the case, right? Because I got that $1,000, that was not an income to me. That wasn't a business transaction. That was a family dinner, and everybody was splitting up the fees, right? And I just happened to be on the receiving end of that. So what's going to happen? PayPal at the end of the year, they're going to send me a 1099-K. Say, John, congratulations, man. Your wedding dinner business is doing great. I got $1,000. I'm going to wait a minute. I shouldn't be paying taxes on that. We're just splitting up a dinner bill, right? And so the previous rule of $20,000 and 200 transactions was set high enough that it's not going to catch a lot of these little instances that might take place, right? But now, with the new limit being $600 and no real limit on the amount of transactions, well, guess what? Now, a lot of people are going to get these 1099-K forms that had never gotten them before, right? Because if you do 200 transactions and you do $20,000 of transactions during the year, well, hey, you probably really do have a business, and so maybe that's maybe that's it. But there's all kinds of scenarios that might happen. I saw one of these happen this past year. I had a client come in. Oh, I'm getting these letters from the IRS saying I hadn't reported all my income. We start digging, we find out the guy's got a business, right? And so the guy had run short of cash a few times during the year. So what did the guy do? He swiped his own credit card through the terminal at his business. I need $1,000. Swipe the card. Well, guess what? Now all the IRS is trying to include all of that in income because they're saying, well, 1099-K, we've got, $15,000, $20,000, $25,000 worth of income here that you didn't report. Well, we were able to resolve that because we got this out of the IRS examinations. We got it into appeals. We were able to show that those cards that were swiped were his own credit cards, which turned that money into a loan. So it's no longer income that you have to report it and pay taxes on it. It's now a loan, right? So he basically took a loan out of his credit cards, right? So that kind of situation can and does crop up. Family members splitting rent, and they send each other money through Zelle or Cash App or any of these, and and that can now get caught up in the $600. Now, what the IRS has done. So 2022 had already been what they called a transition year, which means that the law now says $600 and no minimum amount of transactions, but IRS went ahead and left the old rules in effect throughout all of 2022. And in November of 22, IRS announced that they were actually extending that, and now 2023, the year that we're in right now, is going to be another transition year. All right. Now, I have read that 2024, but I don't think this is finalized yet, but I read that what they're considering doing for 24 is they're going to bump it up to, bump it down, I guess. So from 20,000, now the new limit's going to be 5,000, and after that, they'll go all the way down to the 600. And so that's they're kind of easing people into it, getting everybody used to this. This is going to be, it's going to be some adjusting. People are going to get hit with tax bills. People are going to not know what to do, right? So if you get a 1099K, one of the things I can tell you, if you get it, IRS guidance is if you think that you shouldn't have gotten it. Let's say somebody used your name for whatever, stole your identity, whatever, and that's not your 1099K. The very first thing you should do is get in touch with the issuer of the 1099K. So you get this 1099K in the mail, you should go into the company, calling the company that issued it, hey, this is not me, etc., etc. They're either going to want to fix it or they're not. If they don't fix it, then your tax professional should know how to back that income out and attach a statement to the tax return and state that is an incorrect 1099K, right? So that is that's the story behind the 1099Ks, right? So credit card transactions, you received some money, and now if it's $600 or more during the year, no minimum number of transactions, $600, you're getting one of these forms, so you got to know what to do with it, right? Because also, there's characteristic issues. What is that money for? Did you sell something? If you sold a painting that you had hanging in your foyer of your house, right? So that's going to be one way that the tax implications will be treated. So it's a lot behind the scenes. In other words, though, 1099Ks, that's coming around the pike. People have started asking me about it a little bit, and that's what I do. I answer tax questions. So if you have tax question for me, feel free to email me or call me. You've got my website now. It's 99-taxhelp.com. My contact information's on that. 800 number 1-800-99-TAX-HELP. And I am John Mitchell, tax attorney here in Houston, Texas. I love to hear from people. So if you got tax questions, reach out. I might make it a segment on the show. So thanks very much for being with us. And hasta la vista, baby, as once was said in the famous movie, right? Take care, everyone. Thanks for being with us.
This has been a Now Media Networks feature presentation. All rights reserved.